All right, you guys. So welcome to the Harmony Community Call. It's August 13th, 2020. And I'm really excited to have on Julian from Sesameseed. Julian's the founder of Sesameseed. And for those of you who don't know, Sesameseed has been a very core part of the Harmony community, running a validator, bringing in a lot of new community members to Harmony. They are also a grant recipient, and they're building a automated market maker on Harmony. And another side note is that they actually were the first to issue an HRC20 token on Harmony's mainnet, and that is Seed, their staking derivative token. So really excited to have Julian here, and we're going to talk about what he's been building. So Julian, I'll hand it over to you if you want to explain sort of the concept behind the protocol that you've been building. And if you want to do a demo, that's up to you. I know you were saying that you may or may not be ready to unveil this yet. I know you have very high standards, but I'll hand it over to you.
Cool. So first off, I do have a couple of things to show. I can show a little bit, so that'll be great. We'll get to that in a minute. But yeah, basically, just as Nick mentioned, we came into Harmony, right at the launch of their mainnet, trying to join in as a staking partner and as a community representative, and we've seen a lot of success because of that. We're really happy to be here. We're really happy with the style in which Harmony communicates and builds their community, and this sort of transparent, constant feedback. We love to see that. That's kind of exactly how we operate it as well. So we've been pretty excited to build on Harmony since day one, and we kind of picked up the ball and ran with it. And even before we came to a conclusion on this grant proposal, we had already started running ahead. So it's great to see Harmony jump in and say, "Hey, this is really cool. Let's keep going." So in a nutshell, kind of as Nick had summarized there, what we're building here is a smart contract used to provide swaps or an unlimited liquidity style DEX, similar to Uniswap or things that you see like that, Bancor. It leverages a couple of really interesting pieces of technology, things like price discovery, which is what's used to automatically balance and set the price of a pair. Doing this in a decentralized way such as this really allows for any pairs to be made, so people can come in, set up any kind of pairs that they want. Liquidity can be provided by the community, and it kind of sets a really nice tone and a beginning point to enable new users to come in, build a concept, launch a token, launch a project, and have a nice utility case for that token. So we're pretty excited about some of the ways in which we solve the problems. There is a ton to unpack here, but we have definitely gone kind of a step beyond what you see with things like Harmony Uniswap and Compound and things like that. And we are utilizing a lot of the interesting features of the Harmony blockchain to enable those. So I'm excited.
Very cool. So can you maybe explain a little bit more about when you said you're using unique features of the Harmony protocol? Can you describe, go into more details of like what are you enabled to build on Harmony that you couldn't build on other platforms? Because I know you've built a similar automated market maker on Ontology, for example.
Yeah, I think that probably the most significant thing is the cost. There are a lot of things that can be done within these smart contracts that you will see, companies like Compound or Balancer or Uniswap don't pursue, just because it would take these smart contracts and it may push the cost to a point where it's not reasonable, or it's not reasonable to do within a single transaction for a user. But on Harmony, we're able to do all of those, and the cost doesn't impact our ability to develop that. So I'll give like a perfect example, claiming rewards. Basically, the way that things work on some of these other platforms is they're taking snapshots of the entire ecosystem. They're doing some off-chain solutions to make sure that that math is all being done on a separate server, so that then they can distribute the tokens in a much more efficient way. The alternative to that would be to say, do the math inside of every transaction. So that means every time you buy or sell, you have to run these transactions, you have to perform these distributions, and that could lead to some extremely large expenses on platforms such as Ethereum. But when we came into Harmony, and we can kind of take a look at some of the costs of running these transactions, because they're so cost effective, we can start to do more things and do much more interesting things. We can do much more interesting things within the token transaction itself to enable things like claiming mechanisms or accruing balance mechanisms. Some more global parameters can be applied. And I think it makes for a much more interesting experience that you couldn't see necessarily on a platform such as Ethereum.
Mm. And are you ready to show us or give us a little tease of this
Sure.
platform?
Yeah,
Is that something we can do? You don't feel pressured into it, but
that's fine.
even
I
just
don't mind.
seeing the user interface will get everyone very excited. So don't
sure.
feel like you have to. This is not the big reveal, but
that's fine.
we always love seeing something,
No problem.
That's been built.
Give me just a moment here. Right. Oh, I think my screen share is disabled.
Oh yeah, let me make you a co-host. There you go. You should be able to do it.
Cool.
Big moment.
This one.
Ooh, utrade.
So this is essentially the platform. I think some other people have
How is that
screen
possible?
control.
Oh God.
I have no idea. So anyways,
maybe we should stop screen sharing. Huh, how is that possible?
I have no idea. But anyways, so what I can do is I can show it here, or I could try it again, or I can show it a little later too. There's no problem.
Yeah, let's hold off on that.
Okay.
And I like what I saw though. It looks really nice. It looks very professional. Cool.
Yeah. So I can just kind of talk through some of these points. I think that probably makes the most sense.
It looks very similar to Uniswap in terms of the interface.
Yeah, the interface is very similar. So we're basically, Uniswap has gone above and beyond, and they've really identified some things that allow for, they really tuned their product to a point where it's extremely intuitive to use. And once you do that, it's like kind of like, why is this soap bubble around? It's just the most efficient way to do things. We've explored a ton of options. There's some slight differences. But yeah, it's going to be very familiar in that sense. We're going to be allowing the swapping of tokens, obviously on Harmony. And one of the ways that we're doing that is we use a base token, currently the one token as a base token. So anything can be deployed as a pair. So say seed to one or BUSD to one. And then what that allows us to do is basically attach those smart contracts together. So you can do a BUSD to seed transaction right within that interface, and that will follow those two contracts through to complete the transaction. So that's, in a sense, what that does. And I think the biggest question is going to be things like, oh, where does the liquidity come from? How is the price set? Things like that. And without going too far into it, essentially the liquidity is going to be provided by anyone that wants to provide it. So anyone that say holds BUSD or seed could go into this platform and provide liquidity to a pair. That doesn't mean that they are selling their tokens. In fact, when they do that, they actually receive a derivative token that represents their represents their liquidity that they've provided. And what happens as a result is they're able to earn a share of the transaction fees that occur utilizing the pair that they've provided the liquidity to. So if anyone can do that, we've set the minimum liquidity provided as low as we possibly can. It's currently set at 1.1, so that's pretty low. And from there, you can go in, provide that liquidity, and easily start to earn off of every trade. So the more trades that occur as swaps occur between, say, your pair, you'll earn a share of fees.
Very cool, Julian. Love it. So I think we found a way to get rid of these trolls. So when you screen share, if you click on the top bar, there's a part that says more, and you can, it's like a dot, and you then go down on that menu, you click disable attendee annotation. So we can try screen sharing again if you want to go for it. And then
sure,
as soon as you start sharing, you'll see that top bar and you should be able to disable annotation.
Okay, cool.
Did you find it?
I see it now.
On your Zoom window, yeah.
Got it. Done. Is that better?
There we go. So far,
okay, cool.
No
so
trolls.
Anyway, very simple. This whole interface is very simple. This is kind of what you're going to see. These are all just as
I love this. This looks awesome.
Yeah, so it's going to connect to obviously your Harmony plugin wallet to start. This is what's going to allow you to perform the swaps between any of the tokens that are on the platform. They could just come in and make a new pair if you launch a new project or concept. And essentially, this is the way that it works. It'll show you the sequence of the trade. You can walk through the actual trade sequence. There will probably be some bonuses and things like that in there for those that actually do go in and provide the trade. Some of the other things that we have here, I might as well show that are a little different. Things like liquidity, how that liquidity is going to be provided. Some of the details as far as what you can see here, like the share of the pool, what your current position is. Obviously, this is all going to be supported by an underlying token that represents your stake. So we're calling that a UL token. And basically what that is that's your liquidity provided to that pair. So that's what's telling you that you still have those funds, you still have access to that share of liquidity you've provided. You can come in and withdraw those. You see some buttons here at the top, which I'm not going to go into, but essentially you'll be able to claim your rewards at any time off of those, or you can let them accrue and claim as you want. You can add more liquidity, you can withdraw some, and as you do, you'll earn rewards. So probably the most unique thing about this is, and I want to make sure I can talk about this, I'm sorry. So probably one of the most unique things about this is we're Sesameseed, and we don't do these kind of like hype speculative governance tokens and things like that. I think that's pretty well known how we run our system. We prefer things to be hard coded, hard built, based on some level of infrastructure. And we're going to be doing the same thing here. There will obviously be some level of governance style token in there. And what you're going to see is a token specifically that encapsulates that reward. So when you do earn off of your fees, you're going to earn a token, which is unique to this platform. And that token is backed by the sum of all fees that have been earned within utrade. And the interesting thing about that is we're going to be minting it according to very similar principles as seed. So it'll start out with all of these tokens minted at 1-to-1. So the first trade that happens, if it earns 1-1 in fee, it will mint one of these tokens, and it's backed by that 1-1, so it's 1-to-1. From then on, every token is going to be minted at 90% of the fee value. And so what that means is that every token afterwards is going to be worth more over time, because it's a simple representation. It's the sum of all fees divided by the circulation of all of these tokens. And so if there's 1,000 in fees in there, and there's 500 tokens, it's obviously 2-to-1. So you can take those tokens that you've earned, claim them, and redeem those fees. But what's nice about it is the longer you've participated within this platform, the longer that you've held those rewards tokens, the more that they're worth. And we're not saying by speculation. We're not saying because of some future feature. We're saying because it's actually backed by that. And you can go in just like with Seed Token and claim those fees at any time, and redeem those out and leave the system. It burns the tokens, etc. But what that does is it builds an ecosystem where we can all kind of watch this thing mature. The value can continue to accrue over time. And those that have participated in it the longest are going to find themselves in position of earning more share of those fees. So it's a pretty interesting system. I think that it solves some of the problems that you see with more speculative governance tokens. I think that it makes a platform that's a lot more cooperative and a lot more community incentivized. And I think ultimately what that does is it puts people really in control of the rewards that they've earned off of and the liquidity that they've earned off of their tokens. So they can go in, provide, $100 in liquidity, earn some tokens, and go, I'm done. I don't want to be. I kind of need those funds back. I'm going to take those and go and sell those on the market or do whatever they want. They can take their liquidity down and keep this token. And maybe they think, but I got in so early. Why claim these at 1.5-to-1? I can hang on to those, and they can still residually earn off of this platform via their share of fees just by holding that token. So I think it provides a lot more flexibility on that platform. And obviously, once you build a protocol like this, you can do pretty much anything with it. As we've seen in DeFi, this is meant to be the base. This is meant to be a protocol for use by the Harmony community, and from here, people can build on top of it. We're trying to make this as open as we possibly can. This is entirely within smart contract. There is no Sesameseed server that's going to be sitting there calculating anything. It's all done there, and community developers can come in and build things on top of this. There are mechanisms there to share fees and all kinds of things that can be built out. And from that sense, it truly is a protocol that runs on Harmony that's open to anyone else to build on. So we're excited about it.
That's really cool. I'm interested in this token because it's not a governance token that's promising like future value capture. It actually already has sort of value capture baked into it. And what it sounds like is all of the fees that are generated, are all the fees generated in one tokens, or are they paid out in other native assets? Like if I'm trading, let's say between Seed and BUSD, do I pay the liquidity fee in one, or do I pay it in Seed and BUSD? Is it like a basket, or is it only in one?
This token is currently the model it's based on is only backed by one token, but that's not required. That's not required, but we felt like that was the simplest method. The other thing is there will be incentives for everyone. There's going to be incentives for traders to participate in this. There will be obviously incentives for people that have made tokens on Harmony to participate. And obviously a bulk of the incentives will be going to those that provide liquidity. So there's going to be a very shared system here in which everyone is incentivized to participate.
Very cool. And the way that you're incentivizing people to hold on to these tokens for the long term is that there are less tokens issued than the rewards that are accumulated. So
Yes.
over time, like the share of total tokens doesn't grow as quickly as the underlying sort of collateral or the reward base. So my token today will not be worth as much as it will be, let's say, a year from now, because fewer tokens will have been issued than will have been put into the pool, the reward pool, I should say.
Yes, that's exactly right. And we've made sure that we've put on enough decimals onto this thing because every single trade that occurs will increase the redeem value of this token. So literally every time a trade occurs on this platform, regardless of the pair, that token will be worth, some minute fraction more. So
Very cool.
It's built in that way. It can't go backwards, because even if you think because this is all built off of price discovery, so even if 100% of the tokens are burned, it's going to hold at that last value and use that to mint the next token. So what's happening is it ups the value, trade occurs, it uses that value to mint the new token, the value goes up, the trade occurs, uses that value to mint the new token, and so it constantly accrues over time. So
super
yeah,
cool. And I gotta say, I love this interface. It looks extremely professional and clean. And
cool.
I'm excited for this to go live. I'm definitely gonna put my one in the liquidity pool, and this is gonna be really cool. How soon do you think you guys will be releasing it?
Well, oh boy, we are moving pretty quick. This here is obviously just a demonstration purpose file. We're currently in alpha on our side. There is quite a bit of smart contract work still to be done. We have a couple of audits that are going to be kicking off the end of this week. They're usually pretty quick, so I would expect this to be done over the weekend. And then we will probably be at the point for mainnet smart contracts as soon as next week. So obviously from there, there's going to be beta testing and things like that we have to go through. But we're looking pretty good with the schedule that we have as part of the grant program, as you can see.
I see. And in terms of auditing, are we going to launch sort of in a beta or alpha without an audit and test around, or what's the plan in terms of safety and security?
I guess when I say beta, I would prefer to have on mainnet, and then just control the group that's going in, so we can get feedback and use cases and things like that. But anything that we publish to mainnet is going to be pretty carefully reviewed beforehand.
Definitely.
Pretty essential. One of the things we've really made a huge effort here. And this, it sounds like it's not a standout feature from things like Uniswap and Compound, but we've really made the effort where everything is being done in these contracts. We've made sure that once they're up there, those can be relied on. There's nothing that has to be done outside of us. We've been very careful with what kind of things can be done and what kind of things can even be changed once they're deployed. So that's been the real effort here, and using that, I think that we can find ourselves at a point where there is no pre-mined supply that can be hacked or anything like that. So we're trying to get ahead of those potential issues that some others have seen.
Yeah, and I think that there are a lot of there have been many DeFi protocols that have come before this. And I think there's a lot of learning on things not to do. I'm sure there are still tons and tons of undiscovered bugs still, but at least we have some context of other failures. So if, by studying those, you can probably get a good idea of what not to do.
Yeah.
at least the obvious ones. So that's cool. So thanks for that. I'm really excited. And whenever this is ready, I think our community is gonna go crazy. And maybe
Cool.
you should actually put like deposit limits or something if you are concerned about security, because I mean we've seen with YAM and a lot of these sort of yield farming phenomenons, they can go a little bit too viral too quickly. So that might be a good idea. I've also heard that you guys are maybe developing some additional something else. Do you want to hint or give us a preview or talk about what else Sesameseed is up to?
Oh man, you're gonna have to give me a hint because I don't know which you're referring to. We tend to have a lot on our a lot in progress at once.
I'm not surprised. You guys are definitely all over the place doing a lot of different stuff.
Oh,
I have a lot going on. So I was referring to this idea that you guys might maybe building some kind of bridge. Is that true?
yeah. Yes, that is. So what's really interesting, we kind of have the base of this today. What Sprout does today for Sesameseed is it does allow users to swap seed from Ontology, Tron, and Harmony across those chains seamlessly. So we announced this yesterday that we're going to be running ahead with that concept. And the next few things that we're going to be looking at are concepts such as Ethereum. By deploying seed there, that becomes a very nice seed bridge that we can use. That's a cross-chain solution that can utilize seed token. The hardest thing with cross-chain, obviously, there is the actual oracle itself that has to verify that the transaction occurred on both sides. That's probably the most challenging thing, but that still relies on the underlying asset and making sure that that asset on each chain has the same value. So obviously Seed does that because the value is supported by the underlying Seed ecosystem. So that becomes a kind of a really nice way for us to transition into this kind of cross-chain bridge style solution. And you can see that with something like this token swap, this utrade platform, we can utilize that to basically provide those swaps across chain with other tokens utilizing the underlying platform. So that'll be
Whoa.
pretty interesting. It's coming up fast. You'll probably see our tokens deploying on blockchains such as Ethereum in the near future, and that becomes a very nice cross-chain utility there.
Interesting. So is it that people will bridge their tokens from another chain to Harmony and then it's compatible with utrade? Or is utrade going to be functioning on multiple chains at the same time and you're able to swap cross-chain?
So obviously it'd be great to run it on something like Ethereum. The challenge is the cost. So
Yeah,
probably
exactly.
the best way to actually accomplish that is some kind of feature reduced version on something like Ethereum. And then you could allow the cross-chain swap utilizing Seed to come onto Harmony, and that allows you to move without risk of slippage within the token as you did the transition. Because as soon as you can swap into Seed token on whichever blockchain that you're on, you've got that locked value. Now you just need to be concerned with the actual oracle that verifies the transactions on the two chains. But I think the question I keep seeing here from Jay is Chainlink. This does not utilize Chainlink. Chainlink is fantastic. It's a really cool concept and project. It can use Chainlink. That is something that we're looking at in the future, but as it stands right now, this is all kind of designed in contract. So it does not currently need to utilize Chainlink.
Got it. So thanks for all of this background in the demo, Julian. I want to open it up to the community for Q&A. So if anyone wants to jump in and ask a question, go for it. I've muted everyone, and I'll have to unmute you if you want to ask a question, or you can just drop it in the chat. So here's your chance, guys. Leon is asking when can I use it? I think you kind of went over that already. But do you want to give an ETA, Julian?
Oh, an ETA. So I'm trying to find the chat. There we go. Sorry, I'm not great with this. So you can use the actual exchange utrade platform as soon as we go live on mainnet. Obviously, there's going to be a beta that goes through various stages of accessibility. So we are still on track for the schedule that we have with Harmony to deploy this, which was 6 weeks. We're about halfway through that now. Just so you guys know, that's what we're using as a reference point. The more time that we can take for testing, the better user experience that we'll have day one, and that's really our goal. That's why I was so hesitant to show this, is I want to have our best foot forward going into it. In regards to the cross-chain swap, if that's what you were referring to, this exists today. You can currently swap seed from Tron to Harmony or from Ontology to Harmony today. That exists today.
Mm-hmm. Any other questions? If I give my seed for liquidity, will I still get the daily rewards?
That's a big question that we've had there, and I think this goes back to what I was talking about at the beginning of this, or I was hinting to this, is the DeFi space. This may not. I may get some disagreement here, but I believe that the DeFi space relies on market volatility, right? If the market is volatile, if coins are not stable, you see a lot of movement, then decentralized finance makes a ton of sense, because what happens is the balancing of that movement becomes the opportunity for fees to be earned. But if the market becomes stable, if those don't move as much, there's less reason to provide liquidity, because there's less fees involved. So from my perspective, I see DeFi as more like a stabilizing effort on cryptocurrency as a whole. And so the way that I see this all kind of working out is people are going to have to ask themselves, well, do I earn more by staking or by providing liquidity? And I think the answer to that question is going to be based on the volatility of the market. And the more stable tokens like one become, the less relevant it's going to be to have these kinds of things. Or actually it can have the opposite effect as well. If one token becomes extremely stable and the price extremely consistent, then it can become a fantastic reference source for other tokens on the platform that can move the volatility onto the underlying projects themselves. So I know that doesn't answer your question, and I said a lot of things that didn't make sense, but I guess in a nutshell, I think that the user is going to have to determine that themselves. I think that they're going to have to say, what's best for me based on the token out there. I don't have an answer specifically on seed yet, though.
And the other thing is that that people have talked about this in the past. There is kind of a competitive nature between DeFi protocols that are offering yield for an asset and the actual like staking that asset. So one, if I have, like, let's say I have 10,001, I can either stake it and generate 10% APR, or I can choose to contribute it to utrade as a liquidity provider, and I might get more yield. So there's kind of this competitive nature. But the thing is that then can threaten potentially the security of the underlying protocol. So it's going to be really interesting to see how that plays out. And that's why I think staking derivatives have a very big piece to play. In the same way that when you contribute liquidity, or you deposit your tokens, let's say in Compound, and you get a C token back. What if it was possible that when you stake your tokens, you get a staked one token back that you can then use as a collateral in DeFi protocols? So I think that's going to be a really interesting thing to see if it emerges and if it's possible. And to me, seed is kind of similar to that. Like, it is sort of like a staking derivative. Like, I can stake my one and be earning seed and maybe use it as collateral. So anyway, very interesting kind of realm that we're going into, building DeFi on a staking proof of stake network. Another question I really liked that someone asked is basically, what is the process for listing new tokens on utrade? So like, let's say I have my own project, or I'm a separate DeFi protocol, and I want to list my token and create a pool. What is the process? Is it permissionless? And how is that run?
Well, that's going to evolve as we go through this. The effort is going to be to make it permissionless. But obviously, at launch, these are smart contracts that have to be deployed. So there's basically two requirements, right? The first being the very small requirement of the cost of deploying that contract, which is extremely inexpensive on Harmony. And then the second is it must be a token that exists on Harmony. So as long as it's a token that exists on the blockchain, great, it can qualify, and there's simply the cost of deploying that contract. Probably at launch, we're going to ask that people reach out to us or coordinate with us so we can kind of shepherd them through the deployment of these contracts so that they can, provide the initial liquidity. That is something that I think is probably the biggest learning curve for someone, and we're going to ask that they speak with us directly. Basically, that they come to us and say, hey, like, what's the method? What's the best way to what's the best price for me to start this at? Because that can be a little confusing in terms of price discovery.
So in Uniswap, for example, like the front end, like even if a token is not officially supported by the front end, I can drop in the token or the contract address and still trade. Is there going to be a similar functionality, or will you guys, for each new listing, have to build out a new sort of front end?
No, there's not going to be a need to build out a new front end. These are all contracts that are out there, and anyone can build a front end that views and interfaces with these contracts.
What I meant more is, like, do you have to add front end support for each new listed token, or will there be a way where someone just created a new pool and then they have the contract address of that pool, the token contract, and they can put it in there? That's sort of how Uniswap works.
Yeah, that's smart. So anyone can deploy the contract, and you just have to like type in that contract address. If we had, that seems really simple actually, because everyone is going to use the same standard for buy, sell, trade, provide liquidity, withdraw, claim. All of those things are going to be the same on each contract. So yeah, you could, as long as you have the contract address, that would be a very simple front end to build. I'm not sure if we're going to have some kind of process to add them, or if we're going to make it that open. But making it that open would be fantastic, because then anyone could just build a contract, deploy it, and use that front end. I think that's a great concept. That's a great idea.
Yeah. It's all about the permissionless development, right? That's why we're here. And that's what unlocks so much value and potential. So we have a few other questions. Carl says, do you anticipate a large amount of staked tokens being unstaked to provide liquidity for this? If so, then will this risk the stability of Harmony's network by bringing the total amount staked down?
I actually have so I know that you touched on this, but I think that that this is very neat. What I was talking about before is, this relies on a volatile market, and as more people provide liquidity to a pair, that becomes more tokens that fee is divided over. And you see this happening on Ethereum now, where you have tens of millions of dollars are being provided to liquidity for some pairs, and they move very slowly, and those fees becomes smaller and smaller as you go. And so at that point, at a certain point, it becomes more, you become more incentivized to stake. The only way that it becomes valuable to do that is in an extremely volatile marketplace where the price is fluctuating huge amounts, and you know, you've got bots coming in trying to arbitrage and stabilize this against, you know, Binance and things like that, then it can support more. But ultimately, it relies on a volatile marketplace for it to compete with staking, and staking makes the marketplace more stable. So I
Yeah.
think that I think that I think it supports it to some extent. I don't think it can compete directly.
Yeah, there are even some sort of analogies between staking rewards and DeFi rewards in traditional finance. You could think of staking rewards as sort of like the risk-free rate of return, sort of like a you know U.S. Treasury bond, where like no matter what, this is the yield you're going to get, and there's like no risk. Like this creditor can't go out of business, right? It's always going to be able to pay you US dollars because it owns US dollars. So when you stake to the protocol, it's sort of that same thing. It's like this is a risk-free return. But when you go into the DeFi world, there is risk. The protocol could get hacked. You don't have the same level of security. So it's kind of like, I would imagine the way I would approach it if I were trying to optimize my yield is take into consideration the different risk rewards, right? And diversify. So that's one way to think about it. And I think that, although I will say it'll be hard if people are doing yield farming and there's like 1,000% APR, it's hard to compete with that on the protocol level, because there's no way that you could ever offer that level of return. But anyway, go ahead.
But if you take that one step further, right? Let's talk about like if there's a one token USDT pair, right?
Mm-hmm.
If one becomes a very stable currency, a store of value stable currency relative to USDT, the price won't move very much. So there will be little incentive to perform a trade between the two, which is fantastic for Harmony. But as soon as that incentive dissipates, it becomes the fewer trades that occur there, the fewer fees that are earned, and therefore more incentivized that you are to simply stake the token. So I think this pushes Harmony into becoming as stable as it can be, a store of the value, and etc. So I think it can support the system quite well.
Interesting. Good insight. So let's see. Will there be a minimum amount to participate in adding liquidity, such as the 1,000 minimum for delegation? I know you already talked about this when you were demoing, but maybe people missed it, so you might want to explain again.
There's going to be no minimum amount to add liquidity. However, there will be a minimum liquidity to function. That's more for a user standpoint. You know, at a certain point, it becomes such a small amount that you can't really perform trades, and that becomes difficult on the user. So the whole contract is going to have a stopping point that it won't trade below in terms of liquidity, and that'll likely be set to something like 1 or 10-1 as the minimum trade, just in terms of that, just for user support. But in terms of to add liquidity to it, there's no minimum.
Yeah, and I think that's one of the cool things about Harmony is, and I think you guys have been seeing the fees. I don't know what the GUI cost is now, or the gas cost is, but it's like 300 GUI or something insane. So the advantage on Harmony is that with like drastically lower fees, even people with a lot less capital can participate. And also, I mean, one of the cool things about utrade is that how much of the computation is actually happening on chain versus off chain for a lot of Ethereum DeFi apps. So this is a really key point, that like you don't need to yield farming. If you actually get into it and you try to make some money, you realize that you need to be playing around with like tens of thousands of dollars. Otherwise, you're going to be paying $100 fees for every time you claim rewards or you make a trade or deposit. All these things, there's so many layered transactions you're making, each one costing so much gas, that all of your like APR is going to be like destroyed by just paying fees. So what I really love about what utrade represents and what DeFi and Harmony, the potential for DeFi and Harmony is that you can even just have $10 and you can still participate and earn rewards. So I think this really opens up participation much more democratically. It's not going to be a whale. I mean, whales and people with more capital obviously will still earn more rewards, but it's going to be a lot more democratic of a DeFi platform. That's my hope anyway. So that's one of the cool things about utrade to me that really sticks out. Carl's saying, what is the unlock period if someone wants to provide liquidity? Also, how much liquidity do you envision needing?
So unlock period, we're not doing that. There's not going to be anything in terms of that. There will be incentives to keep your liquidity provided longer, obviously, but there's no need to put too many restrictions on it because of the nature of Harmony. And in terms of, I think the other question that he had was also, how much liquidity do you envision needing? The more liquidity that is within the contract, the better experience the trader is going to have. I think that for those that are kind of deep in the DeFi space will kind of know this, but typically a lot of these trades do tend to be very much automated. There does tend to be a lot of automation that's put around these trades. People build secondary front ends to interface with these contracts so that they can do all kinds of yield farming and arbitrage and things like that. The more liquidity that is in the contract, the more funds it takes to move the price. And so ultimately, it's going to be a better user experience if more liquidity is provided.
Yeah, so basically, I think how much liquidity is needed, I don't think there is a concrete answer. It's more that the more liquidity that gets added to the pool, the less slippage that you'll experience as a trader. So, and I guess there's kind of like a natural maybe market balancing function there of like, the more trading activity that's happening, then the more rewards you can gain by adding liquidity to that pool. So there's kind of like a natural self-balancing there of like, this is a really active pool with more traders, and then more people are incentivized to provide liquidity and capture those rewards, which then reduces the slippage and makes it a better pool for traders to use. It's so cool how all these incentives kind of weave together and just bootstrap liquidity on their own.
The one thing that I will add, and this is more just from our own experience, because we've built a platform like this before on Ontology. We actually have a price discovery system. It's the exact same price discovery system that you see here, but the difference is the liquidity that we can provide. And what we've learned is, instead of providing the user the kind of slippage that they want, we like to have maximums on the slippage, just because people can have a bad experience if they don't understand the terminology and they put in $1,000 and the price slips by like 20%. That could be awful. So we put in maximum slippage of something like 1%, especially at lower volumes. And then as we grow, the slippage can go up, obviously. But for very low liquidity pairs, we start the slippage maximum off at 1%.
Yeah, I think that's smart, because I feel like there could be a potential for someone to make a mistake. Maybe they add an extra zero when they're placing their trade, and then they just buy it and they don't realize that they're going to cause like 10% slippage or something crazy. I saw something like that happen on Uniswap recently, where someone bought, I don't know, like $1 million or 10 million worth of ETH or something in one trade, and so that spiked the price of ETH just on Uniswap, like very briefly. I think that's the story. It's something to that effect. And meanwhile, while all of that was happening, these other guys who are extremely smart arbitraged that price using flash loans and made like $40,000, in
of course
one transaction, which is so cool. But anyway, we're coming up on our time. So I want to close with one last question to you, Julian, which is also asked in the chat. How do you think utrade adds value to the Harmony ecosystem and the Harmony token?
So one of the hardest things, okay. We started out on Tron, and on Tron, there was an explosion of tokens made. And we're probably going to be seeing that soon. I saw Riptio was mentioned here. You're going to see a lot of tokens probably made on this blockchain as well, and that's going to be great. It's going to bring a lot of developers in, a lot of things to be built, etc. One of the most important things once you have those tokens in is somewhere to kind of assess and review them, because otherwise they kind of become a part of a bubble, and it becomes hard to reference what the collective perceived value of those tokens are. And I think that's what this adds the most of. This adds more than anything else a perspective. This can show you, hey, ADC token was made on Harmony. They're building something cool. They've listed it there. These people in this room are saying it's blah, blah, blah. But actually, I can see what the collective value of the Harmony ecosystem is on that token by looking at this contract where people actually provide liquidity and things like that. I think it gives that ability to assess both credibility and community sentiment of a project. And I know that sounds like so distant from what this is, but I think that just the bit, I think even if you don't participate in liquidity or trading, it provides you the information of a project or token on the platform. And I think that's how it helps Harmony.
I love that answer, Julian. I'm just going to take my own stab at the question. And I think the way that it adds value to Harmony, there's like many different ways. First of all, it means that you can do more things with your Harmony One token. I don't just stake my token or send it around to pay people. I can also, deposit it into these into utrade and earn something from it. And I can use my token now to swap in and out of other currencies, whether it's BUSD, like natively on the chain. So there's that added utility to the one token that increases its value. There's also the part of the fact that one tokens will be used as paying fees, not only network fees, but even fees to this sort of pool. And that means that one tokens will be taken out of circulation into the reward pool. There'll also be, in Harmony, we burn transaction fees. So more people that are using this, the more one tokens that are getting burned and taken out of supply permanently. So there's a lot of, there are those two. And then also what you said about the ecosystem, right? I think this is a signal that Harmony is ready for DeFi, and that it's the beginning of an ecosystem that hopefully can grow and become even more powerful. And I think that's a lot of the narrative that drives the value in Ethereum is, hey, there's like all this development going on. There's so many cool use cases emerging. So there's so many different levels. And honestly, Julian, I'm so excited for this to go live. I just want to say you guys have done an amazing job, not only with how cool it looks, but also the reward functionality that you've baked in. It's very creative. I'm super impressed. And I think our whole community is going to be stoked to help you promote it, put their tokens in and use it when it comes out. And hopefully other grantees will start using this as a way for them to bootstrap liquidity for their own projects. So thanks so much for coming on, Julian. Everyone, let's give him a round of applause. And thanks to the whole Sesameseed community for everything that they've done, not only for this project, but for everything over the last few months. So good job, Julian. Thanks for coming on. Everyone else is muted, so you only get my applause, but you can hear the collective applause of the whole audience. So cool. That's all. I have a last announcement before we wrap up, and that is that Manny says that if you joined from Twitter, please drop your Twitter handle in the chat, and you will qualify for a potential reward. So go ahead and drop that in here. And so I'll stick around. I'm going to stop recording, So thank you guys. This was another awesome community call. I'll be tweeting this out, so help spread the news of what we learned and what we saw. And thanks again.